Okay, traders and people looking to begin their journey trading, thanks for coming with us here on the journey here at ACY Securities. I will be the host for this evening's Quick Start webinar. My name is Nathan Bray. I'm one of the trading mentors and, of course, senior account managers here at ACY. Joining me and riding partner in shotgun is our own senior market strategist, Duncan Cooper. Hi, Duncan. How you going?
Hi, Nathan. Hi, everybody.
And thanks for joining us, Duncan. Duncan's just come out of one of our analysis webinars live. So thanks for joining us this evening, Duncan.
No worries. Good to be
here.
And
this evening, folks, we're going to be, it will be pretty casual. We're going to have a chat to you about a trading strategy that we want to introduce and explain to you called Quick Start. And Quick Start was developed, I guess, many moons ago, so well over a decade ago, and designed to allow traders to be able to start trading, get a quick entry into using a strategy. Okay, one of the most important things is trading with a plan. Okay, so being able to develop your own trading plan as you gain knowledge. So Quick Start allows people to be able to follow a strategy, rinse and repeat it. It's very much like going and hitting golf balls at a driving range so that you can start to work out just how bad you are or what you need to fix, that kind of thing. Trading can be no different when you want to trade with a strategy. Very similar for me, and you can tell I'm got a pretty bad suntan at the moment. I've been away doing some surfing, and I think using those big foam surfboards when you want to learn to surf, it's very simple, okay? It's very simple to be able to get to a position where you can catch a wave, stand up and start surfing, okay? That may not win you a competition, but at least it allows you to get in the game, and to be able to do that when it comes to trading. That's really what Quick Start is. It allows you to follow a strategy, implement that strategy, and get into trades where I guess the most important thing really happens next. What do you do once you are standing up on that surfboard, or what do you do once you are in that trade, so that you can exit that trade in line with your trading strategy or your trading plan? So with no further ado, let's just get in right now and have a look, okay, at what we're going to cover this evening. So I'm going to share my screen with you to start off with. So let's have a look at what we're going to cover this evening. So here we have it. This is myself and Duncan, which it proves, folks, you don't even need to be good looking to be able to do trading full time, as you can see by our photos. So let's have a look at Quick Start right now for you. Now, this evening, folks, we won't be giving any personal advice. So we certainly would encourage you to have a read through the risk disclaimer that you should be able to see on your screen right now. We will be talking markets. We will be talking trading strategies. We will be talking technical analysis. We will be looking at charts. We will be looking at different market conditions and discussing that. But what we won't be doing, folks, is giving you any direct advice to say you should buy this or you should sell that. So that, in effect, is what the general advice is, what we'll be covering by nature tonight. So now that you've had a read through of that risk disclaimer, what are we going to cover this evening? So we're going to be having a look, I guess, at why trading with a trend is important. And I'll get Duncan Cooper in a moment to discuss that with us. We'll also talk about, well, now that I know that trading with a trend is important, how do I identify those trends? From there, we're going to show you Quick Start. So I'll explain to you how Quick Start strategy works. And basically, it's a trend following strategy, allowing you to trade in line with a longer term trend, with the momentum of, say, the shorter term trend, and then looking for an entry, okay? And be able to look across a whole variety of different instruments to isolate those that are matching the criteria of Quick Start. So we'll go through that and explain it, and then we'll also show you live in the market tonight the way the market is playing out and see if there's any opportunities that may present themselves in line with the quick start strategy. From there, I'm going to bring Duncan Cooper in again to have a chat then. So once we've sort of got a strategy, we understand quick start, we then want to get an idea and say, okay, what are other really key principles that I could implement into using quick start that might assist me at the end of the day, folks. What are we here for? We're here because we want to be profitable. We may not be here because we think we're going to be the smartest analyst in the room and we're going to pick the market right all the time. That isn't certainly what quick start's about. It's really about getting people to use a strategy, understand the strategy, and most importantly, implement it, okay? Because that can be the hardest thing. All right, so from here, let me just get started. So, Duncan, what I'd like to do is just ask you at this point if you could take over control and give us a bit of an understanding of why trading with the trend is so important, and also, I guess, how to identify trend and why trading with that trend is so useful.
Yep, let me just grab the screen.
Please do.
All right, hopefully you can see my screen. All right, so I'm going to take you through a part presentation of the market trend, one of the webinars that we have here at ACY Securities. I run a series of webinars. I think there's 30 in the series, and this is part of one of those webinars. But it's just giving you an understanding of the market trend, as Nathan was giving his surfing analogy. The market kind of moves in waves. So let's just put on our sunscreen. Let's get going. All right, so we're just going to whip through these topics. So let's talk about what an uptrend is. I might just get this full screen. All right, so an uptrend is when we have high highs forming on the chart and high lows. So the true definition of an uptrend, and trends can be determined in various ways using indicators if you really want to, or here we're just using pure price action, is when you have a higher high, higher low, higher high, higher low. All right, and a new trend starts when you have a downtrend here where we have a lower high, lower low, but the trend changes when we move above the last lower high. That's the start of an uptrend forming. Then price will pull back, form a higher low and move up. And this is the waves that we're talking about. We move up, pulls back, we move back up with the trend. So in the strategy that Nathan's going to be showing you, ideally we'll be trading in this move here. Not this move down, but it's going against the overall prevailing trend. This is corrective, but in this impulsive move up in the trend. And the strategy is going to try and identify that for you. So an uptrend, another higher high, and another higher low. So that's what an uptrend looks like. This is a day chart kind of example, but on any time frame that you might be looking at, if you're seeing that kind of formation in terms of price action, you have an uptrend. Right, here's a day chart. Now, on my charts, I have these swing highs and lows that identify the major highs and lows for trend determination. And just take you through a day chart example of an uptrend. So I'm just marking in the higher highs and higher lows here in the recent price action. And the uptrend started when we first of all broke above this last lower high and we moved up. And then we went higher high, higher low, higher high, higher low, higher high, higher low, higher high. It's worth noting that we can get 3 or 4 or 5 days of pullback within a trend, but the trend doesn't really change. It's just a pullback within the trend. And just drawing in the swings there, just highlighting the impulsive moves up and the pullbacks within the trend. All right, so that's what an uptrend looks like on a day chart. Now, a downtrend is really just the opposite. It's when you have a series of lower lows and a series of lower highs. And a downtrend starts when price moves down and breaks below the last higher low. Then we rally back up, we form a lower low, and then we move down, forming a lower high. And if we're trading the quick start strategy in a downtrend, we're trading this downward move here. We're not trading this move up. We'll be trading this downward move here. That's what the strategy tries to identify for you. All right, so a downtrend is just when we have a series of lower lows and lower highs, and it'll keep moving down, moving back up and putting in a lower high, and so on and so forth. So putting that onto a chart, day chart example, marking in the highs and lows. The downtrend on this chart started when we broke below the last higher low here, and then we went lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. There's about a month's worth of downtrend there at least. So once the trend kicks in, it's worth noting that they can last for quite a while. And just to show you the swings here and the change of trend. Change of trend when we move to a lower low, we rally back up then to a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and so on. Here we get a bit of a shift to the upside, possible change in trend before we actually move back into a downtrend here. All right, so uptrends and downtrends, it's worth understanding what they look like in pure price action form. And let's just talk about the day chart trends. And a few points of note: to be successful at trading, we need to trade in line with the higher time frame trend. Nathan's going to be showing you a strategy based on executing off the 1 hour chart, but we will actually be lining up this 1 hour chart trend in line with the day chart trend.
Any particular reason why you're matching, say, hourly trend with daily?
Well, as I just said before, the day chart trend can last for a month.
True.
So, you know, if we're matching it with a 1 hour chart, matching it with a 4 hour chart, the 4 hour chart trend can last maybe a day, and then it can switch backwards and forwards. So that's what we're trying to do is, you know, trade with the dominant trend of the market that could be unfolding for the next, you know, month or two.
Sure.
All right, so for day trading, we'll use a day chart to determine the trend in our trading bias. That's what the strategy is going to do. And trade selects will identify and execute it on a lower time frame chart in line with the day chart trend, which will be the 1 hour chart as we get into that strategy. So if the day chart trend is up, we are looking to buy. If the day chart trend is down, then we're going to be looking to sell. All right. But a strong emphasis on what is the day chart trend. And if you're new to trading or have been trading for a while and not consistently profitable, then I, or myself and Nate, would strongly urge you to trade in line with the day chart trend. You can be profitable not trading in line with the day chart trend, but if you're not profitable at the moment, I think the first thing you should ask yourself is, okay, well, which trend am I trading in line with at the moment? Because, you know, if you're not profitable, first thing I think you need to really work out is have a rule and just trade with the day chart trend in that direction only. Because as you and I know, Nathan, so many traders focus on trading the trend on the lower time frame charts. They don't even consider the higher time frame trend and lose money. They're trading off like a 5 minute or a 1 minute chart, aren't they? They don't even know what the 1 hour trend is.
That's right.
The day chart trends. You know?
Or do they see the giant brick wall of price action that they're running into? Okay, because I guess you can become a little bit fixated on really short term trading because they provide potentially lots of opportunities. And then all of a sudden you realize, I'm running into major levels of, you know, resistance, or where price action has failed numerous times before.
Yeah, and it's worth, you know, saying you can be looking at 1 minute chart, a 5 minute chart, and you think, today I'm going to be taking 6 trades, 10 trades today. But being profitable, if we're talking about being profitable, isn't about how many trades you take in a day. It's really aligning yourself with the trends, the higher time frame trend. That's how you're going to be more profitable, rather than taking as many trades as you can kick out in one day. All right, so that's that delivery, giving you a brief outline of what trend looks like on a day chart. Trying to give that rule of trading in line with the day chart trends. Are you going to take them through the nuts and bolts of the quick start strategy? So over to you, and I'll just jump in if I see something worth talking about as you're going through those charts.
Absolutely. as we go through, I'll explain the quick start strategy to you now, folks, and then we'll actually go in live and have a look at where the market is placed and what opportunities might present themselves. Okay, so we will do that. So I'll just reclaim the host for you now. So let's go in and have a look at quick start. So I'm going to start off with just a few slides. So we'll get in and I'll show you, I guess, and give an explanation of how quick start works as an easy approach to be able to go through a whole variety of different instruments, whatever those instruments might be for you. So tonight I'm going to show you, I guess we're going to stick to 12 currency pairs, okay, to give you the example of what we're looking at, and we'll go through those together. Of course, if there's other instruments that you can use it on, of course you can. You could use commodities, you could potentially use indices, things like that as well. All right, so let me go in and I'll just share my screen to give you that information. So here's quick start. I think it'll be easier if I just show it to you. So basically what it is, we just use an hourly chart. So you'll see this setup that you've got here is what we provide to all our clients. So free to get quick start. At the end of this, I'm going to explain how you can get it set up on your platform. Keep in mind, folks, we're not selling anything to you tonight. We're purely going to take you through this strategy. It's available for free to all our registered clients here at ACY. So it's free to register. There's no obligation to trade with us either. So that I'll show you how to do at the end. But right now, in order to get quick start, we have it set up on the MetaTrader 4 platform so that it's customized and ready for you to use as you're seeing here this evening. So if you go to the bottom of the chart here, it's kind of got it circled poorly like a 2-year-old kid with a crayon. You'll see it makes it very simple. We just use an hourly chart for quick start, and we look right down the bottom and we see the color. If it's green, which it is, that tells us the daily trend. So we stay on the hourly chart, and you can see down there where I've circled that green means the daily trend is up. You don't have to go back and look at identifying the trend the way Duncan just took us through there. This indicator will do that for you as far as putting in, say, in this case, higher tops and bottoms. So you can see that there. Then we go to the hourly trend, which is directly above it. So if I move now, you'll see I've circled it there poorly again. That's your hourly trend. So you can see there the hourly trend or the momentum is green. So the daily trend below, it's telling us it's green, and the hourly trend, of course, is green. So as far as trading with the trend and with momentum, okay, we're matching the higher time frame, as Duncan mentioned, on the daily, and then we're waiting to see that the hourly is matching that. So therefore, we're in a position to say, all right, I might have a bias with this strategy to be a buyer because the daily trend is up, the hourly trend is up. So now what I do is say, well, do I just enter straight away? Like, what is my trigger to enter the trade? Okay, so let me take you through that now, and you'll see on the chart above, there's all these dots. Okay, so I'll just move down to the next chart. And this is zooming in. So what we're wanting to see, if we've got the daily trend is green, the hourly trend is matching its green. So what we want to see is price now a breakout in line with the direction of the hourly trend and the daily trend, which are green. So if price goes up and hits the green dot, that is your trigger. That's showing us that we're getting a breakout in that direction, okay, that we're looking for. So that's as simple as this is. You literally are looking at your daily green, your hourly's matching, and then price goes up, green, green, and hits the green dot, okay? That is as complicated as this strategy gets. So if I just now move down, you'll see price in this example has gone up, and you'll see it's hit the green dot. So the green dot, once it's hit, disappears, and it replaces it with a red dot, which you'll see just below it. Okay, so people might use that as a place to put a stop loss. Perhaps some people go, I'll put it 2 pips below the red dot or a pip below. It's completely up to you. But basically, we're saying that if price was to go down and put in a lower low, okay, then we might just exit this trade and exit with a stop loss. And people can work different strategies to suit the way that they're trading. And then again, folks, you decide, you know, the strategy that you want to implement. This is just like that surfboard, giving you the opportunity to get up on your feet and catch a wave. Okay, how you then implement that, remember, is completely up to you. But as far as this strategy goes, what we're looking for is green, green, and then hitting a green dot on the buy side. Now, let's have a look at that. So effectively, what we're saying, it's a 2-step kind of strategy here. We're saying the daily and the 1-hour trends are matching. Then we're saying once that happens, price is breaking out, reaching the dot in line with the trends that are matching. That's as complicated as this gets for the buy side. And you'll see what it looks like. Price has literally gone up, hit the green dot, replaced by the red dot, and we've got the daily trend and the hourly trend are matching. Pretty simple strategy to allow you to trade with, as Duncan mentioned, with the momentum, okay, of a longer time frame, a shorter time frame, and then showing us that price is breaking out in that direction. Now, let me just show you, of course, we've got the other side of this too.
So Nathan,
sure.
I know you got your slides there, but if you drop into the live charts, there's a perfect example of a sell right now on the euro dollar.
Is that on the euro dollar? Thank you.
Yeah.
All right.
So, you know, why don't you drop into a live example?
Let's definitely do that. I'll quickly just do the sell side. So if we're looking for a sell side, guys, it's very similar. You just literally want the red daily trend and hourly trend to be matching. And all you want to see is price go down, in this case, hit the red dot. So red, red, daily, hourly, and then red dot hit. And that will trigger a green dot that allows you to put your stop perhaps just above there when you're looking for a short position. But let's get in, as Duncan has shown us, let's have a look. All right, so you're saying euro dollar?
Yeah.
All right, so here it is right now. So wow, good call, Duncan.
Nathan, we can only see the PowerPoint at the moment. So
let me just try sharing that again. Can you see that euro dollar now?
Yep.
Beautiful. Okay, so let's just have a quick look. So right now we can see the daily trend on the euro dollar is red and the hourly is now matching. So at some point in this hour, which, you know, it's only sort of 24 minutes long, that has decided to change color. So at this point, what we wanted to see is price come down and touch the red dot, which it's done. Okay, so right now price would have triggered about here, and what we're seeing at the moment is it's already moved down about sort of 8.5 pips, okay, past that point. Now that is your trigger to entry. The question then becomes, for example, in our case, and this is a really good point to make, is do you enter just when it touches the dot? Do you need to enter at that price? Or in this case, for example, and this is a question I'll put to you, Duncan, would you enter this trade now that it's actually not only hit the dot, but it triggered, but it's actually moved a little bit past it?
I prefer to be getting in at the most desirable entry point, because why give away profit?
That's a good point. Because the reality is that's where, if you're seeing a potential setup happen, you might want to just therefore focus your attention and check back in. Remember, it is an hourly chart. So this has literally happened in the last 24 minutes, okay? However, it may take hours. So all day you might have been keeping an eye on this one.
But it's worth, you know, on this example here where if you've seen that the 1 hour trend is down matching the day chart trend,
Yep.
and let's say we haven't quite crossed the red dot yet, you could actually put an order at the red dot. So you could put like a stop sell at the red dot.
Yeah.
Know that if price hits the red dot, you'd be triggered in, and you wouldn't have to be watching that every 1 minute to see whether price is going to cross that dot or not. So once you've got the 1 hour and the daily chart matching in terms of trend, if you can see where the entry point would exist if price gets there, you could enter on a stop order.
Very true.
And sell,
or you could put a
triggers.
Yeah, I was going to say you could literally put an alert in too.
Or an alert, but yeah, I mean, but price can drop real quick, can't it?
Which it is.
As we're talking, it's still dropping. So
it's continuing to move.
Having an order that gets instantly triggered, if that's the only criteria you're waiting for is price to cross the dot, then you can have an order pending there, and it'll take you in if price crosses your order.
And at the same time, you stop. You can look at where the first dot or green dot would be, and you can see there you're risking about, in this case, 33, 34, maybe 35 pips. Okay, so that's where your from your entry, that's where your stop would go. It's very simple. You just put it at or just above the green dot, the first green dot. So that shows you where the previous high is, and that would be where you put your entry in. Then the question becomes, but where do I exit? And I think with trading, that's, a lot of the time people spend using their feelings or waiting for data to try and work out when they should enter. And there's a lot of time, I think, spent doing that. And then the question becomes, well, before you enter, do you also want to get an idea of where your exit might be? And I think we'll have a chat to Duncan about that, because that really becomes one of the crucial parts, I think, of your trading.
Yeah.
Let's have a look then, Duncan, and have a quick flick through and see what else is moving in the market or what potentially we might do. So I'll take you through this very briefly, and we'll start, say, Aussie yen. So if we're looking at Aussie yen right now, we can see that the daily trend is down and the hourly trend is down. So we're in a position where, in this case, we just want to see price come down and hit a red dot, okay? Because right now, the momentum is matching the daily trend. We just now need to see a breakout based on this particular strategy. So that might be one that you might keep an eye on, okay? Whereas if we go across to, say, the Aussie against the US dollar, they're not matching. Okay,
but that could definitely come together today.
It could, but at this point, you sort of say, well, at this point, I'd be more likely to focus my attention, say, on the Aussie yen, and come back, would you say, in a few hours and have a look and see
come
if
back in an hour and
changes.
see what's happening.
Sure.
It's not imminent. It's definitely not going to trigger this hour. So, but I mean, that 1 hour, which is green, I think the thing to really get across to people is just because the 1 hour is not matching, you're waiting for the 1 hour to match the daily. So
yes,
through the course of the day, that 1 hour could match the daily. So you don't write it off for the whole day. It could, over the next couple of hours come together, and that 1 hour could be matching the daily.
Sure. And in saying that, Duncan, like different times of the day, like are you looking at, I know as, Europe around 4 o'clock Sydney time in the afternoon and 5 o'clock the UK, as well as later in the evening here, you do get the US markets open as well. So you do have certain times of the day that you might get some increase in orders going onto the market as Europe wakes up, as the UK wakes up, as the US wakes up as well.
That's right.
All right, so let's keep moving through. Anything else you're liking? So Euro yen.
Well, don't skip the euro pound, because the euro pound, I think, triggered today. So skip back to that.
It certainly did. So let's just go back. So I'm just moving the chart here because it does make it a little bit easier to be able to look back historically.
You can just say in the trading day of today, you don't need to go back too far.
So you can see here, for example, you've got hourly red, daily red, price came down, for example, and hit a red dot. So red, 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 and the green dot was formed, let's say, at the top here. And from that breakdown in line with the trend, okay, we have seen price now move down, about 22 pips so far. And remember, it is very early on in the day there. Is that what you're sort of looking at, Duncan?
Yeah, that was a trigger today. Yep.
And I think if you go back, and I think if we look at, say, I'll just show you an example of, say, dollar yen, just so we keep now. Obviously the market is showing us some selling opportunities, shorting opportunities, but on the buy side as well. I think one of the elements here that Duncan's pointing out, it's if you look down the bottom, you can see the US dollar over the last few days, it's been, in an uptrend, okay, especially against the yen. So what we're seeing here is periods where we get a retracement, a bit of a pullback on the US dollar before it continues higher. So you will see over the last few days, you'll get price in line with the hourly trend go up and trigger for an entry. Okay, so here, for example, price went up, hit the green dot. So if you've got a stop, say just below there, and I'll just put, say, this example in. Okay, and that's where your stop would be. And let's say this is your entry around there. So you can see here, price does move higher, putting in this higher bottom. So it doesn't go near your stop because you're trading in line with the trend, as Duncan explained, okay, with the hourly. And you'll see price continues to go higher. And then look, it triggers another entry a little bit higher on a number of hours away. And then price pulls back again. It's putting in this higher bottom on the hourly. Even when you do get a very volatile moment like we had here in this hour, no doubt, with a news event, you can see we're still maintaining the price action and the structure. So price is putting in these higher bottoms, providing, again, right here, another numerous opportunity and another one higher up, etc. So you're going to have a scenario with the trend where you need to identify moments where it is continuing to break out, but you do have that hourly momentum matching the higher time frame.
There's a nice
Is there
example.
anything there that you want to comment, or what are you saying?
No, so there's a nice example today on the pound dollar. If we drop into the pound dollar.
Is that because you're English, Duncan?
No, got nothing to do with being English. It's just an example.
Gotcha.
And we can
Are
see
you looking?
The daily trend has just turned to up.
Yep.
From
Sorry, a bit further back.
From the larger time frame perspective, and then at some point during the course of today, we did cross those green dots.
And price continued to go higher. We are getting a potential sell-off happening now. So are you sort of looking at this now saying, okay, if we get a pullback, then the next green dot could form and we could look for price to then set up again for another buy?
Well, possibly. It was more of the fact of there was a setup to buy today on that pair.
Sure.
Earlier in the day at some point.
Yes.
And it's worth noting there as well where that buy came in, and we've been discussing, you put your stop at the first red dot in an uptrend, is that sometimes when you take that trade, because of the nature of the trend where it moves up and down, but it puts in higher bottoms within any time frame trend, it doesn't actually pull back to those red dots. It does pull back. So you're going to have some trades where you get triggered in and then price pulls back against you. And this is all about becoming a trader. Is sometimes you have an entry point like that one on the euro dollar that we were looking at for the sell side, where it gets triggered and then it just moves in your direction and in your favor, like it's doing at the moment. But sometimes, like that pound dollar example, you get into the trade and then it pulls back against you. So you need to have your stop loss in the correct position. Otherwise, when sometimes price pulls back, if your stop's too close to the market, you'll just get stopped out. unnecessarily, because if you go back to that pound dollar example where the entry was today, we can see there that it pulls back. But if you put your stop at the first red dot when you get in the trade, price doesn't pull back to that level, does it?
That's right.
And then it has actually moved up into a profitable move through the course of the day.
About 13 pips higher. So
I mean, that's something that all traders have to get used to, is that just because you take an entry on a trade, sometimes it will pull back against you for quite a while. And you may think it's not going to work, but then through the course of the day, things turn around and it starts to move back into your favor. So these are the emotional roller coaster things that we have to live with as traders, that sometimes it immediately goes your way and sometimes it doesn't. But it doesn't mean to say that you're going to have a losing trade. You just have to live with that ebb and flow of the price action whilst you're waiting to see whether that trade is going to work or not.
And that's pretty much what it comes down to, doesn't it, Duncan?
Yeah.
Whether the trade works or not. And therefore, by having a more mechanical approach, okay, you're leaving your feelings at the door. You know, you're sitting there right now, you might be looking at this and thinking, oh, it's turning around. You're having an emotional attachment to it. Whereas when we have a strategy where we're saying, right, if it gets to here, you know, I will exit this trade. You know, therefore you're allowing the actual strategy to work rather than letting you become overcome with your uncertain emotions, which I think is why having a particular strategy and executing it can be really useful.
Yeah.
All right, let's have a look at close to us in Australia, New Zealand. In New Zealand, yen is not matching. Okay, so for now, I'm able to just discard. New Zealand dollar is not matching, okay, as the daily trend is down. The US dollar CAD, for example, is not matching. So I'm able to sort of go through a whole variety of instruments and perhaps using this strategy, refine it back to some opportunities, ones that are either just setting up or very close to setting up, or ones that I've got a bias that's clear to either be a buyer or a seller for. And then a number of hours later, I can come back and I can see if anything's changed. So it does allow you to look at lots of opportunities, isolate your biases, and then execute a strategy on a breakout. Now, the other thing is, of course, folks, if you've got any questions, send those through to us now. The other thing I want to, I guess, point out is this particular strategy, it is developed, and it is a great way to get people started in trading with a very simplistic view. Now, remember, it certainly isn't a strategy that takes into account other factors in the market, okay? So this is a good one to get started or to refresh the trading that you're looking to do, okay? And refresh the idea of you actually following a simplistic strategy and being able to get into the rhythm of being a trader. However, when you do want to increase, I guess, your knowledge and your understanding of different elements of trading, we do have a whole variety. So I'll just show you here profiles. So in profiles, we have a whole number. So quick start, which we're on now, is only one of them. We do have different strategies to suit different trading conditions. Some people are looking at trading intraday. Some people are looking at trading longer term. Some people are looking at you know, really small entry exit criteria, almost like you're scalping the market as well. So we have different types of strategies to suit different types of trading, and all of those strategies are taught in Duncan Cooper's 30-part trading course. So you basically can do an entire course from the first 15 parts, teaching you every aspect of all the different I guess, profiles that are available and set up. And what people tend to do is then find the one that suits the type of trading that they're looking to do, and then they focus in on those. Now, your account manager, of course, will be able to spend some time with you when you do have questions as you're learning it, or even if you want to join Duncan Cooper's 3 live analysis webinars. You can ask direct questions there in the evening here in Sydney. So let me just jump to that for a moment. Can you see my screen there okay, Duncan?
Yeah, points back up.
Yeah, brilliant. So just to recap, there they are. You get all the customizations for your trading platform on MetaTrader 4, and your account manager, of course, will set that up for you. There's no charge, as I mentioned earlier. Then you've got your 30-part trading course. So you'll go from beginner to advanced, and you can watch those recordings whenever you like, or you can join Duncan 3 days a week, and you can go through and watch him do analysis and education live, and you can go through that as well. The problem with the markets is they're open 24 hours a day, a lot of them, 5 days a week. Okay, so even though you may have the great platform set up that you can follow, and you may be aware of really key levels in the market that you're looking for, a lot of the time it can happen while you're asleep, or it can happen when you're busy. So what we do have, and what we have created here at ACY, is your live interactive trading feed that gives you live alerts. So it does alert you when price is close to and near a key level, with a complete explanation or a short 30-second video as to why that level is deemed a key level. And really from there, it allows you to be alerted live, and then you can go in and have a look yourself and make your decision on whether or not you see it as a trading opportunity, or whether or not it suits the type of trading that you're looking to do. And then for the more advanced clients, so our bespoke clients, or clients that are very familiar, I guess, with the technical analysis and have a trading strategy that they're familiar with and that they're instigating, then we do have what we call the inner circle. So that is available for more active traders to have a direct conversation with myself and Duncan. We do it once a month. It allows traders to listen to what other traders are doing and hear what questions they might have, and more importantly, how they're trying to tweak the type of trading they're doing to potentially get better results. Okay, so it allows traders to talk to traders, and allows people that have gone through the 30-part course that Duncan provides the recordings for to be able to have direct one-on-one time. So all of that, folks, is available to you at ACY. All you need to do, of course, is just open up your live account. So I'll just show you with the screen here. It's pretty straightforward. So if you go to ACY Securities, ACY.com, you'll see a button here that just says open an account. So you can just click on that. You just need to provide some details. As you can imagine, we do work under financial services regulators, both here in Australia and overseas. So we do have to make sure that we are following the regulators' requirements, okay? So in this case, generally, it's just to identify, we can say, yes, we spent the time to identify who these people are, and we understand what their requirements are. So that way we can then provide you everything that I've shown you here tonight, and even assist you by setting up your platform also. Now, I guess, Duncan, is there anything that we can perhaps show that you're seeing on the quick start before we head off?
Let me just share my screen.
Go for it.
All right, hopefully you can see my screen.
Yeah, I can see that fine.
I thought it's just, it's just worth discussing. We've talked about an entry point. This is that pound-dollar example from earlier in the day. I've just highlighted here where the entry point is and where we've been discussing about putting stop loss at the first red dot. But I think it's important that not all trades are profitable. Some are profitable, but it's important that you have a target preset. And I think it's important that you understand the importance of risk to reward. And what I mean by that is, let's say we're setting a trade up here and we're getting in at the entry point and our stop loss is down here. We may be risking, say, on this trade, $100. Keep things nice and easy. Well, we want to be targeting up the chart for a profit target, $200, so that we have a risk reward of, say, 1 to 2. So if I'm wrong on the trade, I'm going to lose 100. But if I'm right on the trade, I can potentially make 200. Because I would say, a lot of strategies maybe have a success rate of like 50-50. You're going to have a winning trade, a losing trade, a winning trade, a losing trade. I mean, all strategies have a different hit to loss ratio, win to loss ratio. But as a new trader, you know, you're going to have wins, you're going to have losses. And really the only way that you can start to maybe show a profit in your account is to have a good risk to reward model. So as a finishing point, I think it's worth understanding that, you know, if you're going to risk $100 on a trade, for example, then make sure you're targeting to achieve a $200 profit if the trade runs nicely for you. So I'm just showing you here, you know, if we were entering here at the green dot where we cross, stop goes down at the red dot. That's where we would lose if the trade doesn't go in the direction that we're anticipating. We want to target twice the amount of the chart for target. Now, it doesn't mean to say that price will get there, because we can see on this trade at the moment, price is maybe turning around at the moment in the short term. But that being said, you know, and I'm sure you can say the same, you need a good risk reward, don't you? Because as you know, not all trades will work, and that risk reward will help you if you have a series of losing trades on it.
And it's a very difficult to be profitable, isn't it? Like a one-to-one risk reward. You have to be right a lot, okay, yeah, well, I mean, to be profitable. So.
If you're using a risk reward of one-to-one, so you know you're potentially risking $100 on a trade to target 100.
Yeah. And
you go win loss, win loss, win loss, win loss. While you're making 100, you're losing 100. You're making 100, you're losing 100. Well, you're never getting ahead, are you? You have to have that risk to reward to be able to make a profit. You know, you have to win more than you lose. Otherwise, you're never getting ahead. So you do have to have that risk to reward. Or you have to have a strategy that has a very high win to loss ratio, which can be difficult, especially when you're a newbie. Because as you said before, this is a very simple strategy to get you going, trading with a trend so that you can get your feet into the water, get yourself surfing, but it's not taking into account other technical factors like support and resistance that, you know, we may also think about before taking a trade. It's just a starting strategy that gets you in, learning how to trade, gets you interested in trading, and is it something for you to first of all? And if it is, well, maybe then attend some webinars and get a little bit more knowledge so you can apply that knowledge to the strategy that you're trading.
And looking at it, you know, from a perspective, I know it wasn't until many, you know, moons ago, I was sort of looking at winning trades and getting all excited about it, but then saying, well, how consistent can I be? Because the reality is you've got the scenario where, yes, we're calling it like the trend is either up or down, but what happens when you end up in a period where markets are consolidating and sort of going sideways? So this is where you can start to say, well, am I entering a little bit too late too? So that's where you need to start to adjust, I guess, your strategy and sort of say, well, what will my trigger be? And executing that strategy in a demo account. And I think one of the services, the account managers that we do here is we'll go back and we'll do trade reviews. So we'll book you in on Zoom, we'll have a look, we'll throw the trade you're doing up on the screen, and we'll do some real trade reviews and get really the clients to kind of sell me, this is why I got in, this was my plan. And I can tell you, it's not to sit here and suggest that, oh, you know, it's like everybody's good in hindsight, but it's really about saying, I actually learnt by going back and doing that trade review, okay, of myself. So I think those types of aspects is what can help develop you, you know, when you're trading to become more profitable.
Having a trade review with somebody that has a little bit more knowledge than yourself, because this example of a trade setup here, which is maybe perfectly fine for a newbie, whereas you and I, looking at this trade setup, would probably identify a level of resistance in here. And then when we look at the overall trade setup, it's actually stopped at the level of resistance. Now,
Yeah.
if you don't understand what support and resistance is, then it's, it's an area on the market where the market may move up to and then fall down from, or move down from and then move back up from. But if you
Sure.
don't have those levels on your chart, you don't understand how to plot those levels, you're trading a little bit blind because you're not knowing the importance of higher time frame support and resistance as well. So we've tonight obviously talked about the importance of higher time frame trend, but we also need to understand the importance of higher time frame support and resistance. Now, this strategy will get you going, but as well, if you understand support and resistance, then there'll be maybe a couple of trades here and there that you'll veto, because then they may become a little bit less high probability because you've got a little bit more knowledge.
And they're things that you can add or layer on. Think of it like a Sara Lee chocolate cake. It's like we want to add layers to our trading knowledge, but we want to be able to execute the basics first and then start to say, okay, is there anything else that might hinder this particular trade, or is there anything else that I need to consider? And they're things that if you can just layer them on, eventually you're in a position where you can start to look for, as Duncan said there, sort of potentially higher probability trades that will have more success than others. And we do have a few sort of indicators here, both support and resistance levels that are automated on your chart, and also being able to identify trends that are perhaps in a stronger momentum than other trends, which I was discussing earlier. So these sorts of bits are the next couple of layers. And I guess the first step to that really is to get your account registered. Once that registration comes through, your account manager will then book some time with you and set up your platform so it's looking very similar to what you're seeing here tonight. So it's ready to go and it looks exactly the same each time you log into it. And I guess from there, you can start that journey of watching the recordings of the education course in trading that Duncan has provided, and that you can also ask direct questions as you're learning as well. And I think from there, once people feel like they've covered the information, they're being alerted to the key levels in the market, then they're able to say, okay, now I'm going to trade in a demo account on my own and execute the plan that I'm looking to trade. And I think from there, that gives people perhaps a better opportunity to get started trading rather than sort of learning one thing and thinking it's going to be the magical solution to making you lots of money. Would you agree with that, Duncan?
Absolutely, yeah.
Yeah, okay. Now, folks, if there's any questions, I know we've spent close to an hour of your time, and we do appreciate you joining us, and happy for you to set up your live account and get you started with Quick Start. But if there aren't any other questions, folks, please feel free to write them in. I know we had a question about the headquarters, the building behind us. No, the entire building, because I think it's well over 25, 30 floors, and there's actually 2 buildings. So they're not all ACY staff, maybe one day, but we do have offices around the world. We sort of occupy a good couple of floors here at this particular building at ACY headquarters. But if there aren't any other questions than that, I'm happy to say thank you for joining us, Quick Start, and we look forward to working with you here at ACY.
Thanks, everybody. Thanks, Nathan.
Thanks, everybody. Thanks, Duncan.